Welcome back, and today I'm going to break down exactly why ultra luxury properties take so long to sell. And it's not just about price, it's about psychology, liquidity, and timing. So let's get into it. Let's start with the numbers. A $10 million home with a 20% down payment effectively means that you're going to be getting an $8 million loan on the property. You're financing around $8 million. That's a mortgage payment of around $50,000 a month, right? And that's just the mortgage. When you include taxes, insurance, maintenance, you're looking at potentially $65,000 a month, maybe more. And this is on a $10 million home example. So ask yourself, how many people can realistically afford a house like that, a monthly expense like that? Well, according to the US Census Bureau, only about 0.01%, so you hear like the top 1%, this is the 0.1% of American households has an income that is $2 million or more, which would be a conservative benchmark for affording such monthly expenses. That is your first great filter. The biggest hurdle you're going to be facing, obviously, is just the amount of people that can afford a house like that. I mean, it's simply supply and demand. How much demand there are for $10 million homes and up. But this next bit is arguably more annoying to deal with, which brings us to section 2. Taste is personal. Even within that tiny buyer pool, taste becomes a massive filter. Let's say you've got a stunning Spanish-style estate, but your buyer, unfortunately, only likes modern minimalist homes. That's an immediate no matter how great the property is. Ultra luxury buyers are picky. And honestly, if you're spending $10 million, why wouldn't you be? If the vibe isn't perfect, they move on, right? The style isn't perfect, the way that the house is situated, they just move on. They'll look for something else or wait for the right thing to come up. This is the third barrier. Typically, traditionally with real estate, we go by things that are called comps or comparables, right? So if every house on this street sells for $1,000 a square foot and you have a 2,600 square foot house, it is probably worth it to list the property at $2.6 million, right? Because that gives you $1,000 a square foot. Now, let's assume that in Beverly Hills, these are not the real numbers, but let's just assume that every property sells for $2,000 a square foot. And you have a 5,000 square foot house, great, you get it listed at $10 million. Just because the comps say your home is worth $10 million, that doesn't mean that the market agrees. If you got one real buyer and their number is 8 million, that's your market. At this level, it's not about volume, it's about leverage. And oftentimes the buyer in the ultra high luxury has more of it. At the end of the day, price, the real value of something, is whatever someone's willing to pay for it. So this brings us to section 4. So let's play pretend here real quick and pretend that we are in the market for a $10 to $15 million house in Beverly Hills. Now, let's say you live in Europe. If you are truly a serious buyer and you are really looking and want to move, you will hear about a property that's for sale in Beverly Hills within a month or two maximum, if not in a couple days or a couple weeks. It doesn't matter where you are in the world anymore because of platforms like Zillow, Redfin, and Homes.com. The internet has made everything so accessible, you hear about things very, very quickly. Your speed of information is really fast. So if it's been sitting longer than that, buyers know they're just not biting. And if no one's biting, unfortunately, this is the harsh reality. You just have to price reduce, right? In a market like Beverly Hills, there will always be a buyer for the right price, right? Because it's such a desirable area. And we're just using Beverly Hills as an example, but there's dozens of places like this around the planet, right? You could talk about Greenwich, Connecticut, or Manhattan, New York. These places have such a demand for them that if your property isn't selling, the reality is you just need to lower your price. Section 5. If your property has been sitting on the market for months and months and months and it's not selling and it's a $10 million house, $20 million house, 30 million, etc., you're likely waiting for a massive life event in somebody else's life to happen for them to buy your property. So what do I mean by this? You're likely waiting for a liquidity event or somebody selling their company, or an inheritance, or even a $1 billion lottery win. And that actually happened. Edwin Castro won the $2 billion Powerball jackpot and bought a $25.5 million mansion in the Hollywood Hills. That home had been sitting on the market for over 200 days. The listed price was $30 million, and he got it for $25.5 million. So not only was it on the market for 2/3 of a year, right? He still got it at lower than what the listed price is. So those 5 points that I just covered are really the main reasons that I think $10 million plus properties take a long time to sell. But I'm going to just list off some other reasons that I think are kind of more secondary effects that might impact the timeline of some of these deals. Illiquidity at the high end. Even wealthy buyers are often very asset rich, not necessarily cash rich. Their money might be tied up in business investments or other properties. So to buy a $10 million property or home, they often need to move money around, sell stock, or even sell another home, which takes time. Appraisal and financing challenges. At this price point, many buyers want to finance at least part of the deal, and appraisals become tricky. There might not be enough comps to support the price, which can spook lenders to force a renegotiation. If financing falls through, you're back to square one, unfortunately. Sellers don't need to sell. Unlike mid-market sellers who may be relocating or downsizing, ultra-luxury homeowners often don't have to sell, at least not as much as mid-market and low-market sellers do. They can afford to wait for their price. The psychological dynamic removes urgency and slows deals down. I mean, that's kind of how that expression like FU money comes from, because if you're really not in a position where you have to sell at all, to heck with it, I'm gonna wait until I get the full price that I want for my property, right? I'm gonna wait for that person to come around. And oftentimes on some of these properties that have been on market for 800 days or more, I'll put an example of that. That's almost 3 years. You're almost waiting. This is your expectation. You're almost waiting for the market to kind of climb up to where your expectation is. At that point, I mean, 3 years is crazy. Privacy and showing limitations is another challenge. High net worth individuals often don't want open houses or a parade of strangers through their home. Showings are by appointment only typically, and often require vetting. So, proof of funds, financials, pre-approvals, stuff like that, which drastically reduces foot traffic and slows momentum. Overpricing and emotional attachment. This is a big one. Overpricing is probably the biggest challenge just in any home sale. Sellers in this segment can be emotionally attached to their property, especially if they've custom built it or put a lot of work into the property, which oftentimes they have. This leads to overpricing, which repels even qualified buyers who may feel insulted or simply will just look elsewhere. So that was my quick little bullet point list of some other reasons that affect these deals. The 5 that I mentioned in the beginning are really the big ones, the ones at the core of it, but these other ones influence the dynamics of how these deals are made and oftentimes influence the outcome as well. So I thought they were important to mention. Luxury real estate isn't just about square footage or comps. It's about timing, taste, and patience. If you're a seller in this market, know that the right buyer might be months or years away. Obviously, as you get up into these higher price ranges, your buyer pool decreases, and the type of individual that buys your house is pickier and wants things a certain set of ways, and that's just the reality of the world. So anyways, guys, I haven't really heard anybody talk about this topic on YouTube in a clear and concise way, but luxury properties are probably either some of the most difficult properties to sell or some of the easiest properties to sell. I feel like it's kind of either or. And some of these properties that you see on the market that have been on for hundreds of days kind of display that point. It takes an immense amount of patience, and odds are it's a very unconventional person that's buying your property, and sometimes an unconventional way of purchasing the property, like literally financing the deal is sometimes pretty unconventional. Yeah, so thanks guys for watching, and like the video, subscribe, and Let me know your thoughts down below. If you're in the market for $20 million homes, where are you looking? And that's pretty much it, guys. So hope you found this interesting. Thanks so much. See ya.